Homeowners insurance, as we all know, is a huge problem across the nation, but especially in California. Let me help you navigate some of the common concerns and issues. Homeowners have all seen increases at renewal, non-renewals, and cancellations due to condition or where your property is located. If you or someone you know has been impacted by the tragic fires in Los Angeles, we want to extend love and wishes for them to recover soon. In the meantime, we all need to be vigilant and help each other with our insurance. Oftentimes, since this is not included in your mortgage or HOA, it's not given the scrutiny and attention that it deserves. Now is a great time to get out the policy and educate yourself about your coverage and your coverage terms. Are you properly insured? What does loss of use cover? Can you even find your insurance? If you don't understand your insurance, why not Google some of the terms so that you have a basic understanding? Or better yet, contact your insurance agent, possibly even do a sit down. Involve trusted advisors and friends and family to make sure that you have the best coverage for your particular needs. Whether your home burns down or is a partial loss, you're still going to have to be obligated to make your mortgage payment. So what we've all recently experienced has put homeowners insurance to the forefront of, hey, I need to do better. I need to take a look at my insurance. I need to know where to go. I need to know where to find it. And I need to be sure that I'm adequately covered. So now let's do an overview of renewals, non-renewals due to condition or high risk fire zones, and condo homeowners insurance. Renewal. Homeowners insurance should be shopped annually. And what that means is your insurance company typically will send you an insurance renewal about 60 days prior to it renewing if they're going to continue to cover you. After about 30 days of them sending that renewal and you don't contact them, they kind of assume that, hey, you're going to stay with them and you're going to renew. And they send the invoice for payment to your mortgage company. So if you are going to renew, it's highly recommended that you start shopping right away. And if your, especially if your renewal has gone up considerably. Me personally, I get my renewals, I look at it, I compare it to the cost of last year. If it went up just a little bit, I'm very happy with my insurance broker. I'm very happy with my insurance company. I'm just going to leave that in play. Another circumstance would be I get my renewal, it's $500 more, nothing has really changed. I'm going to contact my insurance broker and I'm going to inquire, why did this go up? Can we shop with a different company, a different reputable company? So your course of action at renewal is to shop your renewal. And I've got some trusted referral sources below that I know and trust, and you're welcome to take advantage and use that information as a resource. Non-renewal due to condition. Oftentimes the condition non-renewals, you're given advance notice. I've seen up to a year or more of advance notice. Hey, we are not going to renew your policy because of the roof or because of debris strewn around the property or maybe a large tree overhanging the property. If that is the case, those repairs need to be handled. You have to give it attention. If you're canceled due to condition, it's going to be so difficult to get new coverage. And if you get new coverage, they're probably going to want the same things repaired. You're going to need to get estimates for the repairs. So this is your course of action. Get estimate for the repairs and begin to execute. If money is tight, look at obtaining a home equity line of credit or a cash out refinance for repairs. TDR mortgage offers all of those. Sometimes when I'm given a particular situation and I look at the overview of what the client needs and they need to be referred out to somewhere else, I can do that too. So we offer all of those solutions to help get you money to solve this problem. Sell your home. If you simply cannot afford to make these repairs, you seriously need to sit down with, friends, family, trusted advisors. Perhaps a friend or family member can help you with some of these repairs. And I know it's harsh to say sell your home, but you cannot afford to be uninsured. It could cost you so much money down the road. And so many people were uninsured during the LA fires that it's heartbreaking. So you need to sit down and, have a heart to heart and figure out your insurance and, what you're going to do. Don't be afraid to ask for help. I think a lot of people, I know myself included, sometimes we need help and we don't ask for it. So please don't be afraid to ask for help. Renewals due to high risk areas such as fire zone. Again, insurance companies, there's a hair on my lip. Insurance companies typically give significant advance notice for renewal due to high risk areas. And it is what it is. You can't fight it. So if you are given a non-renewal because an insurance company is no longer offering insurance in your area, you have to shop for insurance with a broker that offers the California Fair Plan. It's very expensive, but it is a necessary evil in California. And the way the Fair Plan works is you're going to have the California Fair Plan is for fire only. So you're going to have this California Fair Plan for fire, and then you're going to have your other basic insurance for, regular things that go wrong with a house, loss, water damage, personal property, things like that. So a recent example was a family that we helped buy a 650 house in the Inland Empire. They had like 1,800 to 2,200 regular policy. And then the fire policy was over $5,000. So that's going to be very, very typical. It's very, very expensive. Again, this is one of those things that you have to understand it. You have to involve, people and get help if you don't understand it. Now, let me read you the definition for the California Fair Plan. It is not taxpayer funded. It's a statutorily mandated involuntary association of private property and casualty insurers. It writes risk that private insurers will not write. It will be able to pay all claims. It may have to resort to assessing all California policyholders to do so. So what is your course of action if you get a non-renewal due to being in a high-risk zone? You have to shop providers that offer the California Fair Plan. If the payment is no longer affordable, there have been people that have gotten these fair plans that are just simply not affordable. If your fair plan insurance is $10,000 or $15,000 a year, and it's not affordable, you have to consider all of your options. What if you were to look at a replacement home in a different area that is not in a high risk zone, and enlist the help of family, friends, and trusted advisors to help you navigate. This is serious. You cannot be without insurance. Condo homeowner policies. Now, this can be very, very tricky. So condos have a master HOA policy that's basically included in your homeowners association payment. You are provided a master insurance policy at the close of escrow, and you get so much documents sometimes, unless your loan officer says, hey, keep this is your master policy, you may not even know that you received it. And I don't think that most HOAs send out like annual policies. So you have to check with your HOA to find out who is your insurance company, and you have to find out what the coverages are. Typically, HOAs only cover insurance of the structure. So think about your structure is this right here, right? And it covers everything outside of the structure. But the things that are inside the structure, what is inside the structure? Inside the walls: carpet, finishes, fixtures, cabinetry, furniture, like personal possessions, jewelry, computers. That is a walls, the technical term is walls in HO6 policy. So your HOA provides for if the structure is damaged or burns down, that's included in the master policy. But the walls in coverage is a second additional policy that you control that is for your particular contents. And some condos do provide for walls in coverage, but it's going to be very, very limited. So you would need to definitely figure all this stuff out. So how about we look at our course of action for condo owners? Contact your HOA, find out who the insurance company is, and then call them to get a copy of your policy if you don't have it. Contact the master insurance company and find out the policy limits and understand the policy limits. Ask the master insurer. Usually it's like for example, the last one we did, it was a State Farm was handling the master policy. It was a property in Upland. They did not have walls in coverage, but they're already handling the master. They're very familiar with that condominium complex. So why not ask them if they could provide an additional walls in coverage and see what they're offering? Then why not get a second opinion? You have your master insurance policy, the master insurance policy insurer, walls in coverage. Why not send both of those to an outside company to make sure that you're adequately insured? I think it's always good to get a second opinion or have somebody put eyes on what you have. And if you don't understand it, my past clients can all call me, involve me in having me look at, what they have going on. And again, this stuff is typically provided at the end, but if it's included in your payment, a lot of times you just don't give it a second thought. So you have to be mindful about these things. Insurance contacts. I'm going to have a list of people that I use that I know and love. And one of my preferred brokers, I don't have affiliations or interest in any of these companies. All the companies that TDR Mortgage uses are used only on the basis that they provide a quality service at a fair price, and they do a great job. So we don't have any outside affiliated interest. Greg Washington, broker at Western Pacific Insurance. I have all of my personal policies with him. His son, Nicholas Washington, specializes in Fair Plan. Natalie Delgado, agency owner of Goosehead, fantastic broker, like an asset to the real estate community, and offers all of the coverage, including Fair Plan. And then Louis Cano is a newer agent that I've been using through AAA, the Automobile Club of America. And so before, AAA was really difficult to deal with, and they caused delays in real estate transactions. And so we would, when you buy a house, you use whatever insurance company you want. Sometimes we'd get to the end though, and they were so difficult we couldn't close. We'd have to use another insurer temporarily. And then when the homeowner got in the property, they would switch to AAA. But it's a new day. It's a new day in insurance. And, sometimes we're finding AAA. For example, there in Los Angeles, I had a duplex purchase, investment purchase. It was a property that was in good overall condition, but a little bit rough on the eyes. And it was an older 20s property. I didn't have people that wanted to insure it. And one company that I found, I think it was like $3,500 that they wanted to charge. We sent it over to AAA, and I was a little concerned because, they're kind of picky on what they insure. But, for the right property, they are chef's kiss. This policy came back at like $1,300. So wonderful, right? $1,300 versus $3,500. So what does this tell us? What does this information bring to the front is that as homeowners, we have to be diligent and we have to be our own advocates, right? You just can't have a policy and let it sit there and make sure that it's adequate. You're only going to find that it's adequate after a major event. So why wait for a major event? Take control of your homeowner's insurance and figure all of this stuff out. And if you need assistance with mortgage or real estate in California, please reach out to my company. My name is Teresa Timms. I am the owner of TDR Mortgage and Real Estate Group. I've been lending in California since 1998 and a licensed agent since I think 2001. And I specialize on the mortgage side of things, and I would love to be a resource. I would love to assist you with any mortgage or real estate needs. If the real estate is not right in our own little Southern California backyard, I have alliances with realtors all over the state. And if our company is not suited to best serve you, I'm going to refer you to somebody that is. So feel free to reach out and leave comments, like, and subscribe. That's very, very helpful to what we do here. And love you and take care and have a beautiful day.